What is going on with AppLovin, ticker symbol APP? This stock has been on a wild ride, and the chatter is getting loud. Today, we're diving deep to ask the crucial question, is the bottom in for APP? All right, let's cut to the chase. The big story rattling AppLovin right now, and what's causing all this market anxiety, revolves around a reported SEC investigation. Apparently, the SEC is looking into AppLovin's data collection practices. This kind of news can send shivers down any investor's spine, especially in today's privacy-conscious world. This regulatory cloud is casting a long shadow, leading to significant pressure on the stock and fueling a lot of FUD. That's fear, uncertainty, and doubt for those new to the game. First, for those who don't know, AppLovin Corporation is a software-based platform for mobile app developers. They help these developers with everything from marketing their apps with solutions like app discovery, to analytics through Adjust, and even optimizing their ad inventory with Max's in-app bidding. Essentially, they're the engine behind a lot of the mobile apps you use every day, helping developers make money and find users. Management, despite the recent news, has been projecting strong growth, talking about 20 to 30% year-over-year growth in their gaming segment and future expansion opportunities. Now here's where it gets really interesting, folks. We've got management saying full steam ahead with robust growth targets, but then we have this massive regulatory overhang with the SEC investigation. So, how do we reconcile this contradiction? We break it down with our scenario analysis. Let's walk through the possibilities, from the most optimistic to the most cautious. First up, our base case. This scenario assumes AppLovin navigates the SEC investigation, maybe with some fines, but without fundamentally crippling their business model. The regulatory cloud definitely tempers the enthusiasm, so we're dialing back management's aggressive growth a bit. We're looking at a more conservative 15% EPS growth for the year, rather than their 20–30%. So, taking the current EPS of $6.73 and growing it by 15%, we get a projected EPS of $7.73. Applying a PE multiple of 75, which is a slight compression due to the risk, our fair value comes in at $579.75. We're assigning this a 40% probability. Why 40%? Well, while the underlying business has strength, the technicals show a dominant downtrend, and though the price is above some support levels, it's nowhere near resuming an uptrend, which adds to the uncertainty. Next, let's dream a little with our bull case. In this sunny scenario, the SEC investigation resolves favorably, maybe a small slap on the wrist, no major operational changes, and the market breathes a sigh of relief. The FUD dissipates and everyone embraces AppLovin's strong growth potential. We're talking 25% EPS growth here, pushing past the higher end of management's guidance. Current EPS of $6.73, growing by 25%, gives us $8.41. With the regulatory overhang gone, we can see a PE multiple expand to 90, bringing our fair value to a robust $756.90. Sounds great, right? But we're only giving this a 20% probability. The technicals are a huge hurdle here. To resume an uptrend, the price absolutely has to maintain above $742. That's a big jump from current levels, and while our fair value is just above it, getting and staying there will require truly exceptional news and sentiment. Finally, we have our cautious bear case. This is where the SEC investigation really bites. We're talking significant fines, harsh new data collection regulations, and reputational damage that hits AppLovin's core business hard. Demand drops, compliance costs skyrocket, and expansion plans stall. This could lead to a negative 5% EPS growth for the next year, so $6.73 current EPS, a 5% decline, gives us $6.39. With this kind of bad news, the PE multiple would compress significantly, down to 50, resulting in a fair value of $319.50. We're assigning this a substantial 40% probability. Why so high? Because the technical analysis strongly supports this bearish outlook. The stock has been in a clear downtrend ever since it printed a weekly topping tail, and key supports are at 536 and 472. The current price of $587, while above the first support, is still incredibly vulnerable within this prevailing downtrend, making this a very plausible outcome given the fundamental threats. All right, let's pull up the chart. Here's what I'm seeing based on our technical analysis. After a massive uptrend, the APP chart has been in a downtrend ever since it printed a weekly topping tail. Key supports are located at 536 and 472. To truly resume an uptrend and get back on track, the price absolutely has to maintain above the top tail price of 742. Right now, it's clear the momentum is to the downside. So, is the bottom in for AppLovin? Based on our analysis, with 40% probability each for our base and bear cases and only 20% for the bull, I'm leaning towards a resounding no, the bottom is not in yet, folks. The regulatory cloud is serious and the technicals are screaming downtrend. While the company has solid fundamentals, the uncertainty and negative momentum make it too risky to call a bottom here. Caution is the name of the game for App right now. Given the probabilities, I'd be looking for potential entry points closer to our base case fair value of $579.75 or even lower towards our bear case value of $319.50, especially if the regulatory news worsens. Our technical supports at 536 and 472 are also crucial levels to watch for any signs of stabilization, but I wouldn't be jumping in unless there's a clear resolution to the SEC investigation and a fundamental shift in technical momentum. And that's our deep dive into App. What do you think? Is the bottom in, or are we heading lower? Let me know in the comments below. Don't forget to hit that like button, subscribe if you're new, and ring that notification bell so you don't miss our next episode. Now for the important stuff. I am not a financial advisor. This is not financial advice. All information presented in this video is for educational and entertainment purposes only. Investing in the stock market involves risk, including the potential loss of principal. Always do your own due diligence and consult with a qualified financial professional before making any investment decisions. Past performance is not indicative of future results.